So after expiration, all the puts come off the board. All the puts were worthless on Friday. And if you rolled those puts, they're worth even less today. Big rally. We got to discuss the components of the rally. What's going on? Not much with earnings going on, but a lot of macro to talk about. Tim Seymour, he'll be joining us at 8:45 to talk about the markets and hockey. Let's get things started on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, well, if you want to chase an 85 or 66 handle rally in the S&Ps, well, go right ahead. We're up 65 and three-quarter handles at 57.82, 57.84. The buck pulling back a little bit, down 14 cents, 103.61. TLT, not participating, down 50 cents, 90.20. Crude on the hop, up 55 cents, 74.34. GLD gold up near all-time high, trying to get back up there, up 58 cents, 279.07. SLV back over 30, up 7 cents, 30.09. And Bitcoin not wanting to be left out of the rally. That's up $3,880 at 87,835. Let's bring in the Brandster. Let's bring in Triple D. Let's bring in Christian, and all at one time. Hop in here, guys. How you guys doing this morning? Brandster, where are you? Are you hiding in the background there?
Yeah, I'm always hiding in the background, Joel. What's going on?
So you were listening to the show, the STN show from 3 to 5 on Friday. How was it?
I was.
In your non-biased opinion. In your non-biased opinion.
In my non-biased opinion, as a fan of the show, I had a freaking blast. I was like cracking up. Dennis was funny as heck. And Joel, you were just laughing for like 10 minutes straight at one point.
Why? Because all the trades? Is that what you guys were laughing about?
I think I was laughing at how nonchalant you were, Dennis. Like your comment, like about Philip Morris trading Philip Morris. Are people gonna stop smoking over the weekend? No, I don't think so. And you just throw some money at it. And
because there was that was for the close, because there was like
there was big buy and sell imbalances. I was just fading everything. So I was trying to like talk everybody through the trades as I was putting them in there. Yeah. So.
And Dennis, like where your head was, like on your screen, like I'm like, oh, Dennis is looking over here. I'm like, what is he looking at? I want to know what he's looking at. And then your head would swing over here, and I'd be like, oh my gosh, what's he looking at?
I was looking at the imbalances; they were huge. And I mean, they were huge on Friday. Like, and we got to talk to the pre-market prep listeners, obviously here, because the STN room, we went through the trades with them, but. The pre-market prep, yeah, the imbalances were huge. Pfizer had a 45 million share buy imbalance. Oh. And if you look at the close, and Joel, bring up your charts here and you'll just see it. I've never seen one that big before, I don't think, especially on Pfizer. But it was 45 million to buy. And it went in the last few seconds from 26.10 to 26.50 because it was looking up $2 on it. And then it flipped. Like with 2 seconds to go, it flipped. And then everybody got caught and they brought the whole thing back down to 26, all in a violent swoosh. The algos were all ripped up because all the imbalances, for the most part, some of them moved. Like there was still some movers, don't kid yourself. But a lot of them flipped in the last 2 or 3 seconds, really caught some of the algos by surprise.
Yeah, I can't think of all of them. But the other thing that was interesting about that one is that you used it to your advantage too, because they ripped it and then they dipped it and they brought it back down to like almost scratch. And then you actually ended up using that. I think you used that for a small long, didn't you? I can't remember all the trades that you did.
I was trading it after hours in and out. It was bouncing around between 26 and 26.20. So I traded it multiple times. Yeah, it was good. But I mean, there was a lot of moves. So all we want to say is when you get on these options expiration, there's a lot of huge moves on the close, especially when you get an S&P rebalancing. Christian, were you looking at, some wild moves? You obviously talked to us about the S&P rebalancing. and it was wild at the close.
Yeah, good morning, guys. A lot of volume. I think, when you just go through some charts over the weekend and just look at the volume. But yeah, it was Pfizer. I'm trying to remember if Pfizer was taken out of an index. I mean, that's massive volume, and that's something where you're kind of, whether you're taken out. I know that we focus on the names that are going into the S&P, and when the Dow gets rebalanced too. But was there something specific on why there was that many shares? It had to be taken out of something, right?
Yeah, I think they were all just, and obviously, you can get a rebalance, and people naturally think, oh, what's going in the index and what's going out of the index. It's usually just, rebalancing of share sizes that are in there. So some people, and I didn't have the whole list, but it wasn't just Pfizer. I mean, there was a whole pile of stocks that had, and we were going through them. Some had, there was millions of shares being thrown around in both directions. Some were going up, some were going down. It's why you had such a violent move on the close. I mean, look at Microsoft on the close. It went from 386 to 391 in the last 10 minutes. Just a huge move. Again, Joel's charts confuse me sometimes. I'd still like, but can we see that closing move there? Oh, you can see it on the chart on the left. Just point out, you can see the move from 350 to 355, Joel.
Yeah.
Point it out.
Yeah, right here on the 15-minute. This is, once again, this is the after hours. This is when the imbalance came out. This was the close, and this is the 4 a.m. open. So here's right here is the last bracket, 15-minute bracket of the day, the after hours until 8 p.m. And then all the spoons are open 50. That's the 4 a.m. open. So there's your after hours, and there's your pre-market. Just two quick notes here. One, Microsoft broke a 7-week losing streak. Yes, folks, 7 down weeks. At least that's what I read on one of my notes this morning. And then also for those of you that want to participate in the pre-market show, I just put a link in there to the Stock Trader Network. So you have to go up there and get your work-free trial if you want to start that. And I will say it went pretty smoothly today. Did we have any, like, did a dash get added to the index, Dennis? Did that have any?
It did. Yeah.
It did. Was there any particular price action in that we should take a look at?
Well, take a look. You can see it went down, now 194 to 190, so it did sell off. There was violent moves in both directions, folks. It was violent moves in both directions. That really sums it up. I mean, these typically don't happen every options expiration, but because it was a rebalance, there was some pretty big moves. Now, again, some stocks didn't go. Like I got long CVS on the close. It sold off substantially there and obviously bounced here after hours. But, there was other moves too, like we talked about there with Microsoft and some of the tech names. But it wasn't like I got long a whole pile and short a whole pile. A lot of them did flip in the last few seconds, and we didn't get as much as we thought we were going to get. So that was a little bit disappointing.
And they flipped on the open too.
Yeah, the open seems like so long ago. I can't even really remember the open at this point in time. I remember I got Procter and Gamble late on a short, and it was good. But yeah, this happens. These things, are wild, and sometimes the last couple seconds they flip. That's why when I'm trading those imbalances, I hate to just go in blindly and follow them, because if they flip, then you're burned. Yeah. If I'm enveloping them, I mean, in the gap up, usually they pull in, or if they gap down, they pull in. If they don't gap, I just don't get filled. So I feel like it's the safer way to play it. So that's kind of, how I was.
Well, let's go to the big news of the day. And what do you know? Tariff turnaround, Dennis. What a shocker. Absolute shocker. The whole street is absolutely shocked by this. I guess autos, and you know what? We talk about stocks when they don't go down on bad news. Look at what GM has been. GM's just like, tariffs, who cares? Back at its post earnings high here. So that's what's moving the market this morning. Let's do some tariff talk.
Well, Brenster, do you have the headline from the weekend there? You're sitting there, and I'm going to butcher it, but it was from the Wall Street Journal. Yeah, he's okay. He's going to
keep going, Dennis. I'm on it.
Okay, from the Wall Street Journal, and again, I'm butchering it because I'm going from my memory. My memory is shot because I've been doing 1,000 things here this morning. But basically, Wall Street Journal reporting that the reciprocal tariffs maybe a little bit lighter, for lack of a better word. They used a different word in the Wall Street
They
Journal,
use
but
narrow, Dennis.
narrow. So not hitting
Targeted.
everything as hard as we thought they were going to hit. So they're going to be more specific to certain sectors. They thought auto might catch a break. Maybe that's the case. Maybe that's not the case. I do think there is the case that Trump is looking at the markets. I know he says he doesn't care, but I think he still does, and saying, you know, we've been pretty beat up here. You know, like maybe we should drop something, you know, that, you know, it's not going to be just, you know, destroy the whole world around us and everything. So I do think there's a little bit of that going on here. And that's a good thing. I mean, we wanted a Trump put. The market doesn't have a Trump put anymore. And I think it's very concerning to the market overall. And what we mean by the Trump put is mean at a certain level where Trump's going to come in and defend the stock market. I think there is a Trump put. We just don't know what level that is. So I think it's good. You know, reciprocal tariffs maybe not going to be as bad as we thought, but we still don't have much detail here yet. So I think instead of just, you know, they're buying first and asking questions later, but I'd be cautious chasing this rally. One, it's been the fade trade all year. Two is we still don't have a lot of detail here. So I'm not coming in here and just buying stocks left, right, center this morning. Christian, what are your thoughts?
You know, targeted was the big thing that they mentioned. So, you know, reciprocal and possibly less tariffs than initially thought into some, not only some countries but some areas. So, kind of more of a dial down approach. And you know, this is one of those things where, you know, I think there's a lot of speculation once, and this big date that everybody's been focusing on, April 2nd, you know, whether or not he's going to come through or there's going to be some type of negotiation. But, you know, we continue to be in a headline driven type market. And I mean, this is one of those things where, you know, the market was kind of fearing the worst, and you get some details, and I think you're absolutely right. We need to hear a little bit more in particulars. But yeah, that article came out this weekend, and it was like, whoa, it's a change of stance over the weekend that happened, and you got some big moves off of that.
And the market rally really started too. And we're going to continue this conversation. I just want to add to this is that on Saturday, I believe on Truth Social, Trump came in talking about his Trump coin again. And saying, like, basically, and I don't have, do you have that one, Brent? Did you find that one in the background? Because I'm going to butcher that too. But something about this is going to be the best thing ever.
He said it on Truth. So I don't have Truth. Maybe I gotta get it.
Yeah, but Twitter retweets it all. So anyway, about his Trump coin, it was basically this is going to be the best thing ever, the Trump coin type deal. He
said, I love hashtag Trump. So cool. The greatest of them all, with like 7 exclamation points.
Okay. So pumping his Trump coin over the weekend. The president of the United States of America, this is unprecedented. I've never even heard of something like this. But pumping his own Trump coin to all of his followers this morning. I think that ignited the crypto rally over the weekend here too. So you've had a substantial rally in Bitcoin because Trump gets all excited about it. So that kind of kickstarted it. And then, you know, you get the Wall Street Journal piggybacking it, obviously saying, you know, the reciprocal tariffs might not be that bad. And all of a sudden it's like, risk on, folks. Trump's back. He's pumping the markets. He's pumping crypto. He's pumping everything we like. He's pumping Tesla. You know, we're like, president's behind us. Let's go. LFG. That's kind of what I read over, you know, Twitter over the weekend, is everybody's like pretty pumped up. So that's what you're seeing in the markets here this morning. It is definitely, the entire thing this morning is a Trump pump. Is there another Trump dump coming? That's what we don't have the answer to. I mean, if the reciprocal tariffs are like light and doesn't look too bad, maybe we continue to go higher from here. Maybe the lows are in. If the reciprocal tariffs look bad, come next week, then it's a different story.
And also give with the market rallying, it gives them some chance, you know, a little leeway to go the other way again, right? So just kind of toying with the stock market, which is, in my opinion, not the greatest thing to do. Also, like the timing of all this, and just, I know we already did the expiration talk, but man, there was a lot of puts that went off the board, right, on Friday.
Yeah.
And a lot of times, you know, when all the books are cleaned out, you know, a lot of people were thinking, well, maybe Monday's going to be the down day. And so they ignored that rally on that was a big spike when those imbalances came out, and then
Yeah.
it kept going after hours. So we'll see how the week plays out. We all know a lot can happen in a week here, but you clear out all those options, you clear out all the puts, you clear out, or what if you had calls? What if you had SPY calls that expired on Friday and you didn't roll them? You had the
It
5,
works
7.
both ways.
Yeah.
The books just go clear both ways. So it does open it up for Monday. We've talked about that, and we've got a wide open market here now. I mean, Christian, you're the Momo guy. We got a lot of momentum here over the weekend. Is this sustainable? Are you like thinking, we've got a sustained, bid here. We got a good headline from the Wall Street Journal here. Is this like green light go for you here? Where you'd be looking to buy dips, or how's Christian Fromhertz approach this market this morning?
Well, last week we did nothing but but trade in a range, and the high of the week that we saw last week was Monday. We had a nice move on strong breath. Tuesday we gave it back. Wednesday we moved up on the Fed day. Thursday we moved back down. Friday morning was really weak going into that into the futures expiration, and then we had a heck of a rally there at the end of the day. So it's been back and forth, back and forth. So I am looking forward to price finally getting out of that range from last week, and we'll have to see how the week develops. I mean, would I be buying on the open here? No, not necessarily, but I think that you have a chance that now out of that range that maybe we're back in a little bit of a buy the dip mentality. And then there's just some support that I'm watching for SPY. I would like to see us stay above 565.61. That's a short-term level. That's the top of the value area for the week. So I think that you just continue to have to be strategic, because to your point, it has not been a a chase market when we're up. I mean, those have been areas where you actually want to sell into a little bit and lighten up. But I'm a little bit more optimistic going into this week, because seasonality is we're now in that period of very,
Yeah, let me show that. Yeah,
a very strong period at this point. So we should be there should be some tailwinds behind the market this week.
Yeah, Christian, I'm going to, man, I got so many windows open here. Let me bring that up and go to my correct StreamYard. There we go. Brentster helping me out.
Is
Let's
that
see
is
if I
that the
can.
right one, Joe?
Yeah, yep,
Okay, sweet.
exactly. I don't know. Can I make that
Can
bigger
you
here?
hit Control plus, Joe? Or
Oh,
if
I
there's a
got it.
little,
Is it
yeah,
right
there you
here?
go.
Look at
Yep,
that.
use that.
Whoa, look at
There we
that.
go.
Go ahead, Christian. Take it away.
Technology.
Yeah, I mean, just where we are, that blue arrow is not perfect. I just kind of put that into approximately where we are, and I don't look, day by day in terms of seasonality. So I just kind of cuff it and say, because there's so many other factors at play. But now that we're in the last week, and the end of month will be on Monday, a week from today. But yeah, I mean, the market should have some tailwinds associated with that, and I think now that we're through quadruple witching, we can concentrate on some other things, and
Can you
also.
explain? So, could you
Yep.
explain this a little bit more details? Is this overall percentage of how much the S&P rises during these
It's just
periods?
it's the performance of the S&P year over year. In looking at where there's strong periods versus where there's weak periods. I mean, I know that we kind of just have some type of basis where we know that there's stronger periods of the year and there's weaker. So for example, like a weaker period would be always around September. August and September, those are not strong months. But March, April, those are your really strong periods, as well as the end of the year. And again, this is just kind of think about things in terms of probabilities, right? This is something where over time we know where there's stronger periods versus weaker periods.
And just sticking with the periods theme here, one thing just to consider just for today is we know overnight performances in this market have been strong forever, where you get huge big moves overnight, and a lot of times you don't get that follow through. So think about the weekends, think about the overnight trade, think about how many times we've been ramped overnight, and then started to leak it back. Think about how many people are underwater in this market here too. I just don't know, like, if you're going to be the day where we're up 1.2%, we're going to end up 2.5%. I don't know if I see that happening today. So that's why I think dips maybe get bought here. I think we have a window. I think there's room to spy 580, maybe even this week if we know. But I don't know if we go straight there. I don't know if we're just going to rip right to 580 this morning. Maybe we have a check back. We have some nervousness. Maybe you're buying the dip. But you also got to be selective in your stock picking here too, because I don't think it's going to be everything that goes. I mean, obviously, we're already starting to see some separation. Consumer staples are down because it's a risk-on day. But we're seeing some other things down here. Lockheed Martin got rocked on Friday, is down here again this morning, down another $8. So that's a story in itself as well, which I don't know if we had a chance to cover. We covered it in the STN room, but that broke during the day, so I don't think we actually had time to cover that. They didn't get the contract and Boeing did. Guys, have any thoughts on Boeing and Lockheed Martin?
Oh man, a big follow through on the downside with the Lockheed Martin, down another $9. So these things are, you don't know how much was factored into the market, because look at what Boeing did ahead of this last week. And in the market, that's not a chart of the SPI right there in the upper right. So don't know how much of that news was out. Don't know how much it's going to affect the earnings. It takes a while for the money to filter through. But I just wanted to circle back, because a big theme of our show is like rotation, right? And where's the money going? Where's it leaving? We're talking about the consumer staples, just like just an incredible run. Check back last week. Then we talk about the Mag 7. Man, we talked a lot about Meta on the Stock Trader Network. That's coming to life. Is this just a temperate, like, okay, are we just renting these stocks for a little pop until that April 2nd? Or is this going to be the start of another meaningful rotation back into mega cap tech?
I'm torn. I'm very torn in this market, because part of me thinks we've had a really good dip on a lot of really good companies, and AI theme is not going away. And let's back up and buy some stocks. And then the other part of me says, well, I don't know where Trump's going. I don't know what this trade war is going to look like. Yeah, I like the Wall Street Journal article that it's going to be, it's more specific, not across the board, maybe more, just, not just tariffing the whole world. So I'm just kind of torn. And at a certain point in time, maybe you can just sit back and say, hey, maybe we got some short-term upside here, but I don't know where we're going from. So I don't know if I want to go grab Meta and put in my long-term portfolio. I don't know if I want to go grab all these other Mag 7 names and put them in my long-term portfolio. Would I put them on for trades here? Yeah, but on dips. I never like buying when the market's up 70 handles. I've been burned so many times buying when the market is up 70 handles. And that goes to Christian too. When you're playing Momo, Christian, you're not usually buying the rips, though, like when they're ripping higher. You're usually finding the pockets of where the Momo's going to go, like the setup better, right? Is there markets where you're just flat out chasing?
No, I think you're what I typically look for is a move out of when something is breaking resistance, right? When you've got a nice level to trade against. So if something kind of begins to make that move, and I know, like, for example, Chevron was a name that was a very good name for me last week. And that's not a momentum name, but just an example of something. If something's breaking a range, whether it be like a 1 week range, 2 week, it depends on your time frame, but a daily chart, where you're now moving above a significant area, that is something where I'll tend to look for, something that's establishing a new range, and beginning to kind of get out of that previous range and get into new price discovery. So those are things that I would typically look for. But right now we've been in a back and forth type market. So as I mentioned, like I this gap up this morning, I want to see how it settles in a little bit, and I don't know if there's a catalyst for today or that week, but I'm not in a rush here with the market moving up like this. To the point about some of the Mag 7 names, I tend to stick with names that have also had strong earnings. So out of that group, I think Meta did well on earnings. Netflix did okay. So I would be concentrating on those names and maybe selling the rip on the ones that did not have great earnings.
All right, we do
selective buying.
Selective buying, yeah. Just looking at the SPY. I don't know if I put this up in the on the I saved my chart, but for the S&P here, we came back up to this area. Forget this last bar here. We came up to this area 3 times last week and just absolutely cratered, right? Now it's a little bit. Now we're just starting right out at that area. So can we? I like to see us develop. I don't know what the low, but it looks like we're not going to go back down to the Globex low of 57.39, and you do have a like a 17 handle gap in there. But we all know you can wait a long time for a gap to be filled. But are we going to establish a bid here at the high of last week, which was 57.70.50? Right now, we're 15 handles above that. Not much on the daily up until over 5,800. But as you talk about, you can take out resistance, you can take it out temporarily. But are buyers willing to step up and make a bid at that level? And whether you're looking at the S&P or you're talking about, whatever, like the spider, like I know you gave that 565 number, which is a little bit below, but I'm looking at that like 570 in SPY. I'm like, holy mackerel. I mean, if they could establish a strong bid there, then boom, let's take out, let's have a little run, 575, 580.
There's some room. I mean, there's some room here to go for sure. Stock's massively oversold. We're getting a bounce. There's a room to tack on. I think I'm just approaching it tactically though, and saying I've been seeing so many people buying the market blindly up 1.25% on a Monday morning or on a Tuesday morning or on a Wednesday morning. I just think like let's wait for a check back. Like maybe like half this. Like let's go 568 or 567. Really, really bullish. I don't think you have to chase it here. I think maybe I'm going to be wrong, and this is going to be the day to chase. It's going to be a day to chase, folks. It's not going to work 100% of the time. But I'll tell you, in 2025, if you've been blindly chasing every overnight up move we've had, you've been burned pretty bad because there's been a lot of up moves that have faded. I don't know if this one's going to fade. It's good news, everything, but I don't know it's not going to fade either. And that's why I'm just going to sit back and like let them come to me. Have your levels, let them come to me. It's like Meta the other day when we were talking in the STN room, and it was up $30, in like basically an hour and a half. That was on Thursday morning. And, you could have chased, but the thing checked back the next day and gave back the entire 30-point move.
Yep.
The whole damn thing. So, I mean, this has just been the market where you have been absolutely on the wrong side of the trade if you're chasing. So, fool me once, shame on you. Fool me twice, shame on me. I'm not chasing this rally this morning. Would I buy a dip? Yeah, for trades. Am I loading up my long-term investment account? No, it's still 33% cash. There's a lot of unknowns. I don't know where this trade war is going. Travel stocks, with 2 steel stocks warring last week. Let's just move away from tariffs. The economy in itself, is not doing as well as it was a few months ago. AI stocks, to your point, Christian, which were very overinflated for a long time, that has come off a little bit. The crowdedness of, being in all the Palantirs and all the other names has come off a little bit here. Is that money just going to fly back into those names? It might, and maybe they're all going to lead us the way, and S&Ps are all going to make new highs, going to be up 30% at the end of the year, and we're all going to live happily ever after. Nobody knows. Nobody's got a crystal ball. But I would say that when you're had significant sell-offs and you get these snapback rallies, they're more often selling opportunities than they are buying opportunities. So have your levels.
Yep, and another thing too is like because you mentioned that price action on Wednesday because of Pump and Powell, right? Got us up there, and then like on Thursday, everyone absolutely changed their mind. Remember that? Remember like the mark like Wednesday? Oh my gosh, we're going to the moon. You're dovish. You thought it was dovish. I thought it was hot. I mean, everyone was so split. Christian was nonish on it. And we gave it all back. So, still the interest rate, when the Fed's going to move, it still looks like it's going to be later and later. And man, oh man, if you're trading intraday this week, holy mackerel, Fed speak. Today, Bostic, Barr. Tomorrow, Kugler, Williams. Wednesday, Kashkari, Musalam. And then I think you get a break on Thursday. No, Thursday, Barkin. Friday, Barr and Bostic. So you are going to get a ton of Fed speak this week. And we don't even know if we're going to get any more clarity on interest rates.
Okay, so we did have some earnings here this morning. Spinner pointing out Lunar is our only company that's of note reporting here earnings this morning. We may as well go to it. The stock has been absolutely crushed. We know story stocks have been crushed in 2025. The stories all went ice cold. Lunar, Intuitive Machines, reported earnings here. I can grab those numbers for you if you guys don't have it. I'll just quickly bringing it up. They reported sales of 54 million versus 55 million, which is a slight miss. And again, this is all like a future story. So, it's not so much on the earnings that matter, but more of the story that's behind it. Obviously trying to land on the moon, having these landers work. The revenue 2025, you see 250 to 300 million. Estimates were a little bit higher than that. So the earnings were not great, but you know what? We're in full rally mode here, and the stock is down 75% in a month. So a little bit of a relief pop in Lunar here this morning.
Yeah. Wait, wasn't hey Christian? Didn't this one like land on the moon, flip over, then they couldn't find it?
Yeah, I think it was on its side or something. I don't remember how it went last time, but it didn't go great. It didn't go great the last landing, and that's why the stock got hit as well. I think it landed, but then it was on its side. I don't know if they got it off its side. I stopped listening after that. But this is just a classic storied stock, a stock that worked very well in 2024, a stock we participated in 2024. But the story, as much as the story was the only thing that mattered in 2024, that is not 2025. It hasn't been about the story. It has more been about the value in China, the value, overseas, the value stocks of the USA, because there's been a lot of value stocks in the USA that have pretty darn good years so far. This has been the year of value, not the year of story. And that's more so than, the lander not working perfectly. Sure, it's going to come down on that. But I mean, the stock was already down 50% before the lander, didn't even
You're
land
right.
perfectly.
Yep.
So I think we just got to know, again, I'm going to keep saying the same stuff because, people want to go back to 2024. I don't want to go back to 2024. It was great. There was lots of bull stuff happening.
What about 23?
Americans and Canadians weren't fighting with each other. I'd love to go back to 2024. But you know what? We can't go back. We don't have the capability of time travel yet. Maybe one day we will. But so if we're trading, we have to be in the market that we currently are given. We have to trade those conditions. The conditions we're currently in, folks, even though today looks like the greatest day ever to be in Momo trades, it's been a horrible year to be in Momo trades. So again, I'm just going to be cautious with just blindly chasing stuff here this morning, including LUNR, because this is a story stock that was really cool in 2024, but story stocks aren't as cool as they were in 2025.
Just to give you the technical setups, if and I would say this is not for investment advice. Pre-market high is 780. You just hit that on the last bracket. If you want this to be a lunar kind of day, then you just want to take out that pre-market high. You want to take out that daily high at 813 and just keep on going. The next daily high comes in at 955. It's just one of these trades, decent volume going on. If you're chasing this thing, if you're buying, you're like, Lunar's the greatest stock ever. I love it. And you're buying it off the open, then, you better hope people are following you. Because there's people that are already ringing the register, right? In something like this after the move. But yeah, that is a look at Lunar. We have, talking about momentum stocks, we have Oklo after the close here. And that's up $1.63, a little sleepy here. Any thoughts? Oklo Inc. Once a stock in February that traded all the way up to 59.14.
The blind earnings trade works again. I bought it Friday at the close. Everybody in the STN room, I told them as well. Sold it this morning. So I sold it a little bit ago at 28.50. Should have held because it'd be up another 25 cents, but it was a great trade over the weekend. Trade's over for me.
Okay. All right. It's not a merger Monday in the biotech like you were hoping, Dennis, but Aztec Company Incorporated getting taken over here this morning. Does anybody have it's the James Hartle Company? Is that who's taking it over? Do we have
James Hardy?
What is it? James Hardy?
James Hardy. Yeah, it's ticker JHX.
Oh, really?
Well, that's a ADR, so it's an Australian company. So pretty interesting deal. I think that happened over the weekend. We really haven't seen too much in, not only in this space, but I think, a lot of the deals that I've seen hit the tape have been a little bit more, European based. So, this is interesting. This is one of the flooring type companies. I used to trade these companies quite a bit. This is, the three that go together are FND, Floor and Decor, Trex, which is another flooring or deck type company, and then AZEK. So the details, I could see if I can get you the details for this, but I think it's a cash and stock type deal. But the premium is pretty large on this. So, maybe this gets the group to get going a little bit. This group, the Home Builders Group, ITB, has been so washed out that this maybe could provide a little bit of help to a group that's pretty depressed. And I think it's kind of interesting to finally see somebody kind of take a shot at something and say, hey, these names have gone down enough. And so nice looking deal over the weekend. What do you guys think?
I think they hate it for this, Jay. I mean, they just are looking for growth here. I mean, look at that, down 238, horrible looking chart, then paying a premium. I mean, I don't understand it. The only thing I would say is, and I am not familiar with this company, Christian. What did you say were the potential sympathy plays, if there are any in this one?
Trex, so TREX. That's
Yeah.
another flooring decking company, as well as Floor and Decor, FND.
Yeah,
FND.
Trex is a pure pair or a trade there. I've actually pair traded those stocks before. I have a pile of Trex in my house here outside. On my deck is Trex, and stuff is so expensive, but so awesome at the same time because it doesn't wear. It doesn't, you don't get slivers if you're running on it with my kids or anything like that. The stuff is awesome when you start, but the stuff's really expensive.
I just threw the shard to Sherwin-Williams up there. I mean, that's a little bit different, but I remember talking about that, and if things were slowing down in the housing market, I remember we talked about that. That's had a pretty big sell-off to support. That's traded on 429, not on a couple thousand shares. So not a ton of volume there for Sherwin-Williams. We're holding a bid up here, folks, right up near the highs of the session. 57, 87, 75. Nothing on the daily. I mean, is it too early to start talking about a meaningful retracement here? Way below the 50-day moving average. Let's call it 600-point move. I mean, if you really want to get excited about this, I mean, we haven't even had a meaningful pullback. Get back to 5,900 on this move. We came down quickly through that area. Who knows? See if we go back up just as quickly. Our guest, if you guys are wondering where our 8:35 guest, well, our 8:35 guest is going to be on at 8:45. That's going to be Tim Seymour. You all know him, CIO of Seymour Asset Management. So he'll be joining us shortly here on pre-market prep. And then also, for those of you who are not aware, we'll be continuing our programming here until 11 o'clock today on the Stock Trader Network.
Other stocks in the news. There's going to be a lot of stocks in the news coming up this week. KB Homes, just going through the earnings. KB Homes does report tonight. We know Lennar reported there last week. The home builders have been beat up. And one thing to say is the home builders have not really participated in this rally whatsoever. It's been a very, very tough, not even year for the home builders. They really started selling off at the end of 2024 as well. It's been a tough 6 months for the home builders. Lennar, $190 in November, or $188, $189 in November, down to $115. It reported the earnings were fine, but they just don't care. They just sell first and ask questions later, it seems, on the home builders. I don't know if it's because lumber tariffs or what it is, but these stocks just cannot get a lift. Like, everything has had a bounce. And I want to get Christian's thoughts on this. Like, so many stocks have had bounces from those lows. The home builders have not whatsoever. I mean, IWM often moves with the home builders. It's bounced. Why the hate for home builders? And again, the value has been there. This is also the value trade too. And the value trade has been pretty good in 2025, yet the home builders have just left in the dust. Any thoughts here on why the home builders are just not participating at all?
I mean, I think you got a combination of things. I think that, rates are not cooperating with the builders. We have seen a little bit of a move. I thought that was very interesting, by the way, towards the end of last week, where, TLT was bid up a little bit on, I think that was on Thursday, and completely sold off for the whole day. Friday also, nothing great out of bonds, and this morning they're down again. So, you know, that's good. I really think that this group, the home building group, is going to need just softer rates, and you're not seeing it, right now. You're not even seeing, which I think was interesting from a macro perspective, that you're not seeing, bonds fly higher here, in the face of, volatility in the equity market over the last month. They've been doing decently, but they're not super strong. So that's the one side of it, and then the other side is, it's been depressed by, the possibility of the consumer cutting back too, and and that goes along with not just the builders. One of the things again, the earnings calls, you get so much information, about different groups and different sectors, and like Lennar, one of the things that I believe that they said last week was that they are offering all types of incentives, and those are like lukewarm in terms of like all the incentives, that they're still not seeing a lot of volume. So I think that's, you've got two things, and like, and I know that we've looked at like Rocket Mortgage too, like RKT. And
Yeah.
I've seen call buying in that, but I just think that you're going to need rates to cooperate. Like, I've looked at that trade and I said, okay, possibly there's a refinancing trade in there, but you're just not getting it right now out of either the 10-year or the 30-year yield for me to say, okay, this is going to spur a lot of business for them because of refinancing. So, the question I think but, from the angle of the bonds, and then two, just, is the consumer feeling okay right now? And I don't think so. And I think that's why the home builders, which you bring up a great point, Dennis, that these have been lagging. It's been very difficult to get these things to be able to sustain a decent rally.
I'm just concerned that there's, obviously when you're looking to buy and you're saying the bottom is in, you got to build a case. You're building a case for saying, hey, this is the time, green light, go. Stocks are down, 8% on the SPY, 12% on the Qs. Across the board, we've got 20% corrections all over the place. It's time to go. It's time to get long. But there's just certain pockets that I'm like, are not participating, and it does spook me. And we've been talking even the retail stocks. I mean, so how does the market continue to build on its rally without the consumer? Because you got airlines that have been just a disaster, and a couple of them warned. You've got the home builders that are a complete disaster, not participating in the rally. And then you have multiple retail names basically last week not participating either. I mean, stay away from the Costcos, which had corrections just because they were overvalued. But you go into, all the other retail darlings, and maybe Nike's story is broken. Maybe we can find excuses for them all. But the XRT, which encompasses all of them, is still sitting, it's off the lows, 66 to 69, but it's like, it's basically just being dragged up a bit. It doesn't look like it wants to lead the charge.
Looks horrible.
So I just don't know. I think so.
My thought is that you can, if you want, I first of all, I totally agree with you. I think that this group is showing relative weakness. But if you want to really get into a couple names that you like in this group, you could definitely do it long short. In the airlines, one stock that has been really strong, and there's an activist in there, is Southwest Airlines. LUV has been doing extremely well, and bucking the trend. So, I think that there's some stories like this where you could say, hey, I'm going to be long LUV and maybe short, one of the ones that you really dislike, or you could just go short the whole, the group. So, you could put a stock on one side and short the ETF, or short something like Jets, Jets. Sorry.
Yep.
But that, there's a big difference in some of the outperformers and some of the underperformers. And same thing with the stores. Like, I think, the name that I like in that group is BJ wholesalers, BJ, and you could be short, Target or something, something like that. Or again, just go short the XRT versus it, because I think that you can earn some outperformance considering that there are definitely some trends and some moves at play.
We could talk high-end consumer and low-end consumer, or I don't want to say low-end, but, off price. Look at Williams Sonoma. I mean, 220 to 150 in a heartbeat, trying to,
Expensive stuff, man.
yeah, expensive stuff. And then, if you want to go off stage, off price, I mean, can't be thrilled with the price action in Walmart. What 105 to 85. So
And that is just valuation. Walmart got stretched and overvalued and needed a correction. It corrected with all the other high value stuff. That kind of just fell into that group. Like Walmart, we often think of as retail, but it really fell. It outperformed so much it was almost a Momo trade at that point. So the momentum broke in that. What about those?
Hey, Dennis, we got our guest backstage.
Yeah, bring in Tim Seymour. Let's bring him
Tim Seymour, CIO, Seymour Asset Management. He's going to give us some clarity on this market. Tim Seymour, CIO, Seymour Asset Management, joining us here on pre-market prep. You get the kids off to school and everything?
Good morning, gentlemen. Yeah, it's a rainy Monday. Rainy days and Mondays always get me down, as Karen Carpenter once said. So sorry I planted that song in everybody's head for the day, but it's appropriate. Anyway, everybody's well. I had my roto baseball draft yesterday, my fantasy draft, I should say. No one knows that term anymore, but fantasy baseball. It's because, and obviously Dennis, but all you guys, we talk a lot of hockey here. I kind of feel like hockey season's over. I haven't thrown the towel in yet, but we got a tall order in the world's most famous arena. So anyway,
do you want to hear my fantasy baseball draft story?
Yeah, I do actually, and I think the audience does. So let's go.
All these guys. This is back when I was in Chicago. Everyone convinced me I didn't want to do it. And me and my buddy who I was living with, who actually has really built himself out in the sports world, we decided we're going to do it. We're going to go into this fantasy draft. And we're like, so our strategy is we'll see what everyone else picks.
Yeah.
And then, we'll just kind of follow. We didn't do much prep or anything.
Yep.
So lo and behold, we get the first pick in the draft.
Sure.
Okay. And I don't know if you're going to remember this. I don't think Christian or Dennis will. But we took Bobby Thigpen.
Yeah, I remember Bobby Thigpen. He was a closer for the White Sox, and he actually had 46 saves one year, and I think everybody thought he was better than Bruce Sutter and Dennis Eckersley combined. How's that for memory?
Holy cow.
And they cut him, I think, midway through the season.
Yeah. Well, they burned him out. They threw him out there, and that was back in the day when relievers might even throw 3 innings, dare I say. Today, starting pitchers barely throw 3 innings. So, yeah, I know. And, look, all I can say is, if that scarred you and kept you from fantasy baseball, that's part of it. But the reason most people don't do fantasy baseball is it totally bastardizes your allegiances to your teams. So here I am drafting some Phillies yesterday. I'm like, oh, JT Realmuto for $4, I'll take him. And I'm a Met fan. I mean, I don't like the Phillies. Sorry, Philly. You got enough victories right now. So anyway, yeah, but I tell you, if you're a markets guy, fantasy anything is kind of hand in glove. I mean, it really is. It's all about stats. It's all about reversion to the mean. It's gotten actually overly wonky in baseball. In fact, I actually think baseball's jumped the shark on this. But anyway.
All right, let's talk about the U.S. markets, but more importantly, let's talk about international markets here. Will this outperformance continue?
Well, I think there's some drivers here that are both secular, technical, and so in other words, you have some big macro, you have some bottom up. I think there's a lot of different ingredients, and they all tell me international will continue to outperform. Full disclaimer: I mean, I run an international ETF. IDVO is international. It's the Amplify International Enhanced Dividend ETF. And so, it's a fund that's intended to pay a healthy dividend in good times and bad times. But really, I mean, the good times that have been since the extraordinary times that have been since Thanksgiving, where the DAX is outperforming the S&P by 25%, isn't just a function of tariffs. It isn't just a function of the headlines that are obviously good news today because we've lightened back up. But there's a few things at work here. In the big picture, look, there's no question that the dollar is going weaker. It's not going weaker necessarily by 5 handles overnight. But if you look at the Dixie, we know where it's come from. We know where it could go. And the reality is the dollar is very overvalued relative to a number of the important crosses. We know that the yen is artificially weak. We know there's some dynamics in Europe right now, and that's where some of the fiscal policy announcements over the last 3 weeks have been not just, wow, great news. They've been historic. I mean, this epical announcement that was in Germany, say 3 weeks ago, that they will be issuing more debt and they will be igniting fiscal policy around defense is something that for Germany, the largest economy, the most important economy in the EU, this is a change in how they've done things, and this is going to reverberate throughout the economy. It doesn't mean that Germany is a 5% economy, but it means instead of being 60 basis points this year, it might actually be 1.25%, and it might actually be 2% next year. And if you look at GDP differentials between the U.S. and the European Union, they haven't been in favor of Europe in a few years. But there's a fiscal dynamic that I think actually says that the euro should appreciate against the dollar. So some of this is dollar, some of this is fiscal policy, some of this is deregulation that's happening in Europe. I mean, if the Europeans see what's going on here, I'm not saying that they love American policy right now. I know people in Canada certainly don't. But there is an element of what's going on here that I think the rest of the world is paying attention to. And it's, first of all, it's much more insular. It's much more, let's support our own industries. But in some sense, it really is about deregulation. And I think European deregulation is something that's very important. I think there's the coincidence of all this and just the reality that last year, probably a year ago at this time, I came on your show and I said I thought Mag 7 was never going to be, 7 stocks were never going to be 33% of the S&P ever again. Now they got to be 36%, and whatever. And I'm not saying that changes overnight. Doesn't mean that the fundamentals around some of these companies, I don't think still are not extraordinary. Sorry for the double negative. In other words, I think Mag 7 still looks pretty interesting if you want to know the truth. But I do think the oxygen was choked out in the rest of the world, and that was international investors too. So some money has come home, but some money is really just a function of looking elsewhere. Now, when you get to the pure fundamentals of this. European banks, like if you like U.S. money center banks, European banks are still after a very big move, and I'm talking about look at Santander, SAN, look at BCS, Barclays. So look at even BBVA, which has exposure in Latin America, as does Santander. I think to the best parts of the LatAm growth, you're talking about 25 to 30% discounts on price to tangible book. You're talking about dividends that are probably 20 to 40%, or maybe even 100% more than U.S. money center banks. The industrial story, I mean, Siemens is a company everybody knows, and they certainly know that they're going to be right in the sweet spot of an industrial revolution, part 2 in Germany. But so, there's a fundamental story here, and it's not just Europe. Obviously, we talk about this all the time. The sentiment around China is as poor as we've ever seen it, and it's been that way for probably a year and a half. And the outperformance of the K-Web and Baba and Tencent is something that's a function of fundamentals that are really interesting, but also just at some point, as they say, you make the most money when things go from terrible to just bad. So I think also, make no mistake, the announcements on fiscal support out of China last week weren't necessarily things that even totally make sense, but there is more of an approach towards consumption as opposed to an industrial build out and bridges to nowhere. So I do think some of the announcements in China are important. I think there's, we could go on and on. I think if you look at the charts, and you guys love to do this too, if you look at the relative underperformance of, say, Fez, which is the Euro Stoxx 50 ETF, or just look at the DAX, look at EWG, whatever you're looking at, look at EWP, which is Spain. Spain is probably the best economy, best meaning it's probably the strongest economy in Europe right now. But the relative underperformance for a decade really, something that's striking. Now, if you look at where we might have actually kind of put in our first bottom in this stuff in kind of late fall of 22, when again everything kind of bottomed and started to rally. But you can make an argument for a double bottom here. You can make an argument certainly for a breakout on the charts in terms of relative underperformance. And you could pick a number of different ways you'd be playing it. And emerging markets, which are always a higher beta to the rest of the world, might be the most interesting. And that could be UWZ or EWW Mexico. Sorry. Yeah, go ahead.
Hey, Tim, just a question. And this is a really interesting ETF, this IDVO. I really like how it's broken out. You got 21% of this ETF that's in banks, which you mentioned have done really well, and you like the move here. By the way, European Financials ETF is up 24% year to date. You got really, really nice performance there. But you also have, I like that the way that this is kind of dividend oriented too. You still have some tech in here. You got about 14% internet, but you got mining and energy names in there too. Is there, you mentioned that you think banks has room to run, but do you think also it's a little bit more about value versus growth, or would you rather just pick really interesting companies out of this
Well,
themes?
It's nice to be able to kind of drill down deeper into the story, and hopefully you guys know I don't usually wave the pom poms, so it's nice to talk about this one though, because it's a combination of that's the mandate, but there is a best ideas element to this, which is that if I look around the world, I've even found a way to make an argument that the Cameco CCJ, which is uranium, it's an international story. First of all, it really is. But there's no question gold miners, where I love gold here, so why not grab two gold miners that I think are really executing in Agnico Eagle and Wheaton, and say I want to be overweight there. But Alibaba, with a 40% of their market cap in cash and a real exposure to AI and data center, and Ali Cloud is something people don't even put any value on. So yeah, I mean, the nice thing about this strategy and the nice thing about some of those names is that the strategy is selling upside calls. So we're taking advantage of extraordinary upside vol in some of these names. And when you're selling vol in Baba and Tencent during a run like this, you're well paid, and you keep it short, so you have an opportunity to buy back in if you get called away. But it's also a bit of a hedge on some of those days when these things are gapping, and we all kind of know there's an eventual pullback. So back to, it is value. But there is growth in there. I mean, I'd like investors to think that this is a safe pair of hands ETF. In other words, I want to invest internationally. I want an opportunity to really, know that I'm doing it without swinging for the fences and owning strange names in Eastern Europe or in Latin America or in Asia. But I think there's an element to this, which is we hopefully can find the best parts of where we have best of breed companies that we think actually are either growing their payout levels or really attractive on a valuation basis. And there's no question that there's a value orientation to this. And there's no question that when I look at European financials, that's exactly what I see.
Tim, let's just stay in China here for a second. And I'm long Baba, full disclosure with you. One thing, I just keep thinking about and I can't help myself is like, we've been fooled before though. Like China's had these, Baba in itself has had these 30-40% rallies in short periods of time. Yeah. And then all of a sudden, you get 6 months later, you're like, why didn't I sell it? And, I'm looking at the same thing and thinking, is this another selling spot or is this different this time? And I just want to get your thoughts. Emerging markets have underperformed for 10 years. Is it different this time?
Right. So you guys know my background. I ran long short EM money for 13 years. And so, to say that China is different is to be naive. Having said that, to say that what China has done, and apologies if I brought this up before and used this metaphor, but it's really with Jack Ma and his reassertion as a leader in China tech. It's like Weekend at Bernie's, comes back to life here. I mean, it really is. Jack Ma was being carried around. He was okay. So good. It tells me that this is no accident that Jack Ma is back in a power position within China, and certainly within China tech at a time when China tech has the same aspirations as U.S. tech. So there's an element to this that the last times, for a year and a half or 2 years, really for maybe almost 3 years, the pressure was on Alibaba, right? This was slowly like, we're gonna slowly take you apart and show you who's boss. And I think it's the opposite now. I think Ali Cloud is I think there's different dynamics. I think it's a sum of the parts story. Make no mistake, it's a higher beta stock, but the valuation I can sleep with at night. The kind of thematic story I can sleep with at night. The governance factors are the ones that actually are a tailwind right now. And I'm not going to tell you, Dennis, that it couldn't be a headwind at some point. I mean, someone could wake up some morning in the Politburo and say, these tech darks in China, these guys are running ahead of us and running amok. But I still like the story. I still think it's a fascinating story. Tencent to me is one of the greatest tech incubators in the world. Maybe a better tech incubator than Google, who we know is part of when you're investing in Google. One of the reasons it's so cheap is also one of the reasons why you want to own it, because there's all these other things that they're invested in that are major businesses that really aren't in the valuation. And I think with Tencent, I think that's an even better example of that.
Hey, Tim, let's bring things back over to the U.S. here and the consumer. A lot of good news, hearing a lot of things. We have a nice rally going here, but we all know what drives the economy is consumer spending, and we have factors going on. I don't need to repeat them that are potentially negative for the consumer. Talk to us, about the consumer and where they're headed.
Yeah, I think it's appropriate to wonder where the consumer might at some point tap out. There's been examples of that, and it's funny because we had this conversation about Nike on Fast Money on CNBC last week. With Nike coming out and having the numbers, people obviously really disappointed on numbers that we knew were going to be bad, and et cetera, et cetera. But the story around Nike, it's like, oh, isn't this a Nike specific story? And I don't think it's a Nike specific story. I mean, look at Deckers, down 50% from its highs in a very short amount of time. Like, we're talking about escalator up, elevator down. Look at On, which is like the story, the company that's eating the lunch of Nike. Look at Lulu, which went through this, but obviously was the bigger legacy player in the space that now is actually have people nipping at their heels. So I just, there are discretionary stories that are not just company specific, not just, idiosyncratic dynamics. And I think it's right to look at the travel sector. Look at the downgrades that the airlines have given you from what was, again, a great story. Airlines, you guys, they're great trading stocks and they become investments. But if you get any kind of whiff of we've got to slow down and we might have already had increased capacity a little too much, they're going to sell airlines even harder than they sold them. So I look at the travel space. I look at the places where the consumer was showing no signs of giving ground. And I mean, all the way back to last summer. It has shown signs in these sectors over the last 6 months, but it's not been obvious. And at the same time, I heard you guys talking about Walmart. I mean, you put in multiples on a Walmart, which I love. I love it here, and I can own it here, but it doesn't mean it can't go lower. So, yeah, I'm worried about the consumer. We've had, you guys have seen the same confidence indicators over the last 3 weeks. Confidence is not high, and that has an impact on spending. And the housing sector is another place where, most people are deriving a lot of their ability to put the next dollar forth of discretionary spend. And I think the housing market is sideways at best. I actually think that there's a lot of headwinds there. So I'm concerned about the consumer, but I'm not saying it's not a disaster, because in fact the consumer really does have a lot of pockets of strength, and there's a lot of elements and flexibility to this economy where the consumer is getting some tailwinds from some other things. Energy prices are going to be, I think, a tailwind. I think inflation in services is something that has to come down. And I think, unfortunately, some of the dynamics that we're reading about in the paper every day are going to bring down actually some of the services inflation.
Tim, there's times to be super bullish. There's times to be super bearish. There's times to be neutral. Just everything that's going on right now. We get we come off a quad witch expiration. Market looked like it was going to cave last week. I mean, a lot of things about investing is kind of keeping an even kill. Is that what you're doing here? Or are we going to have another 20% up year in 2025?
No, I don't think so. But I think that approach that you've described is definitely how I'm proceeding. I'm actually, I'm a little bit more cautious to the downside, not to the upside. But it's not time to sell the farm. And I think headlines today are really interesting. Look, there's so much going on in terms of policy. Some of it's a really tough read. I do think there's some really interesting things going on in terms of trying to restructure some of the fiscal debt dynamics, how the U.S. government is spending, how the profile, so what might fall through also on interest rates. But I'm cautious on the fact that I just think you've had such a you had a 27-month period that might be one of the greatest periods. You can make an argument it was the greatest period that markets have ever had. And so that's reason alone to be cautious, but I think there's still a lot of uncertainty. So I think a lot of investors on a day like today, your mindset might be that this is wow, I'm getting another shot to buy some protection, and that I want to invest long, but I want to invest long with the confidence that first of all I can at least cover some tail risk, because there's a few tails out there. And I think that's part of where I think investors are. There's some strong fundamentals in a handful of sectors. I'm not saying that there aren't real opportunities. And as we all know, the 493 that people weren't paying attention to, there was a lot of companies in there that really had gone through bear markets and actually reset the bar. And I think investors should be looking at those names.
Tim Seymour, CIO, Seymour Asset Management. You guys know where to find him on pre-market prep. Tim, thanks a lot for joining us.
This was great, guys. Let's check in somewhere before. Well, we'll check in before that. But I mean, if I'm in first place in my Roto League by Memorial Day, that's a marker, right? You guys know that. That's a marker. So we'll see. Go Tigers.
All right, thanks, Tim. Yeah. All right, it's late. It's 9:06, but you know what? We are just getting started with the programming here. Pre-market prep is over. Stock Trader Network is beginning right now, so we're going to end things over here and hop into the STN room. We'll see everyone over there. If you haven't signed up, you're missing out. Go to stocktradernetwork.com.